Greetings, Dr. Jeffrey Scott here. This is my Market MRI Pro update for Wednesday, November 12th, 2025. I just titled this Mixed Markets. As you'll see, the markets had some plus and minus movement on what would be considered a little bit over average volume. But I think the big news is we're waiting on a House vote. And will we get a vote for passing the continuing resolution and funding, or will we get a surprise? I don't think we get a surprise, but if we do and it doesn't get passed, ooh, this market could fall. Again, Jeffrey Scott's my name, marketmripro@gmail.com. Google Group's called Top Down Trader, and my website's marketmripro.com. As always, this and every video I do is for educational purposes only. Any recommendations I make are in the spirit of education, not investment advice. The intent of the video is to show you how I use my tools for top-down analysis. Trading involves risk. You are solely responsible for any investment decisions you make. I may own or intend to buy or sell any stock mentioned in this report. Trading stocks and options should be considered risky. You should always consult with your financial advisor before making trades. And I have tools in multiple platforms. My Google group's called Top Down Trader. I always make a note there when I post something, so that way you get to keep in touch. And when I travel with my wife and I'm not allowed to talk at night, I don't do videos, and therefore I will make some notes, cut and paste some pictures, and post them to Top Down Trader. So it's a good thing to join. Plus, from time to time, we'll offer discounts. Just go to Google Groups, click all groups, search for Top Down Trader, join it, and tell us how you want to be contacted. Well, Thursday would have been a big day. I have no idea what news is going to come out and when. I've read a number of places that they're not going to ever report the October data. It's old and who cares about it? But we're due tomorrow to have jobless claims, CPI, and then the PPI on Friday. Actually, we're due on Thursday rather to have those. Oh, that is tomorrow. So is it possible that we get those reported? I don't think so. But I'm going to be looking to hear about that as the night goes on. Those could be big movers. When you think about the last Fed meeting and how talked down the 25 basis points several times for December, and there's been some clearly difference in opinion among the various talking Fed heads. So that data matters. We'll get talking Fed heads in the afternoon and then Friday as well. So a lot can still happen in this market. Earnings, we still got a lot of earnings, and the big ones next week on Wednesday, which will be NVIDIA. It's a judgment call to hold stocks over earnings date. It's bad judgment to not know when your stock's earnings date is scheduled. Oh, I forgot to update this, so I'll take a look at it in the program. But and actually, let's just look at this right now. The leaders list is a list that we put together at the June meet we did one in June too, but at the October meeting. And what we do is we put together a list of leading stocks, and we watch to see when that list rolls over. And that list will often roll over before the markets do. You could see there was more down than up today. And if we take a look at that list, we can see here that we're kind of chopping and going sideways, kind of like the market is. So we haven't broken down. We're still above the 17, and that's about all I can say about the list. All right, back to the charts, or to the slides rather. For more information about anything I talk about, say, do, comments, email me at marketmripro@gmail.com. For coding support, if you have issues with the program, viruses, etc., coding at marketmripro.com. No, we're not a virus, but sometimes antiviral software pick up new programs because they don't notice them. Consider joining my Google group, and we've launched our website at marketmripro.com. Onto the charts. So I'm just going to start here. This is the market breadth tool. The left is the NYSE. The right is the NASDAQ composite. It is amazing to me as to how quickly the NYSE, with 1, 2, 3 massively positive days, and today, which was positive as well, not only regained the 50, which it had closed below for several bars, but kind of is at a closing high. I don't know if it's the actual high for close. The high here is 876.99. The close here, high here. Yep, I think we're at a new closing high, folks, on the NYSE. Does that matter? Probably not, but it's kind of interesting how fast we got there. So new closing high in the NYSE, new all-time high on the NYSE. So this market has really recovered off of the slow start to this month. You can see stocks above the various moving averages, the 200 in red, 50 in white, and 20 in green are heading north on both the NYSE and the NASDAQ. And just a couple of days ago, we were commenting about how the NASDAQ had held up well compared to the NYSE. Now it's lagging. You could see new high, new lows were positive. AD lines actually negative on the NASDAQ today. Up, down volume positive and no new signals. So I think that's interesting. Now, the other question is this one top, two top, three tops? Is this a triple top? It's all in the same area. So that's something to be aware of as well if we're looking for reasons to expect the market to go down. Daily briefing, you could see it was kind of a slow day. Diamonds up 0.7, finished in the middle of the range. VIX was up a little bit. Spider was up 0.06, about, a little bit above the middle of the range. Dollar was up 0.04, kind of in the first 22% of the range. The Qs were down 0.08 at 47% of the daily range, and the loser, the Russell at 0.25, was at the bottom of their daily range. And Bitcoin again down 1.3% at the bottom of its range. As we saw yesterday, the number of new lows continued to reduce. The new highs minus new lows are positive. About a 50-50 participation. This deteriorated kind of as the day went by. Was in the 60s until the last hour or so. 53% of the S&P 1500 were up, 46% of the NASDAQ, and 51% of the NYSE. So a little bit higher than normal volume, kind of a choppy, churning day, not much happening. Now, if we look underneath the averages, you could see healthcare on fire. Talked about it yesterday. 1.42% change, 0.86 for financials, materials 0.7. And then the laggards were energy, real estate, discretionary, and communication. So more rotation. That's what we're seeing day to day. The big winners today, silver, gold, metals and mining. We talked about gold yesterday. I entered a nugget position. We'll see if that turned out to be smart or not. I've got a couple of miners already. Semis are up there, lithium, renewables. What was weak today? Cannabis, solar, clean tech, cybersecurity, exploration, data centers. And that's kind of a theme that of the last several trading days, that data centers, which led us high while the rest of the market has been languishing, now the data centers are pulling back and we're getting broader participation. Whether that's good or bad remains to be seen. Timing model got better today. Not perfect, but you can see now the spider has turned into a long position as well as the diamonds. And the Russell and the Qs are close. Qs are one daily bongo change away. Russell still got to get above the WMA, but that's improvement. The weeklies remain in a long-term buy. So we are pullbacks and uptrends until proven otherwise. If we look at the index ETFs, go through these quickly. The spider, another day, not much of a change, up 0.06, closing in the middle of the range. I've got a little bit of a bottoming tail action. I consider that a nothing burger. I guess it's not overly bullish or bearish. Here we are breaking out of a flag. So spiders, I'd say they hold serve. Let's take a look at the Qs. We know the Qs were down today, but really holding at the 17-day kind of a neutral looking pattern right there. And even though they were down only 0.08%. If we look at the diamonds, diamonds look like they had a decent day. As you could see, not only did the NYSE set an all-time high and all-time closing high, so did the diamonds. Bottoms are not made of tops. We're not at a bottom. We're more closer to a top here. And the question is, how long does a top go on before it rolls over? Strong market. Is there anything there that bothers me? Yeah. High jump's getting kind of ripe. And at this point, you expect things to pause. Doesn't mean they go back, but you're getting extended. Nothing that should surprise anybody. If we look at the Russell, this has been the laggard, but even the laggard has had a massive move, reversal candle here above the 50, and right now it's just pausing to refresh, nothing nefarious that I see. We talked about volatility being down a bit today. Let's look at the VIX futures. And you could see actually it was up a little bit on the VIX futures, 1.33%, and resting right on that 50-day moving average, which is an area that I was concerned whether or not that would turn into support. We'd like to see it go back down to this level down here. And lastly, the US dollar. Gapped up at the open, but closed where it's relatively flat, up 0.04%, closing just off the lows. If we look at commodities, gold and silver have been on fire. And look at the candle for today. Gold was up 1.61%, silver was up 1.44. We're going to have days we pause, but to me it looks like we're going to go challenge those old highs. Oil is having trouble beneath the 50 and 200, while natural gas is trying to make a little bit of a move higher here. And you know, is it that exciting? No, it's not that exciting. Natural gas has been beaten up for such a long time. It's below the 200, but it's moving, and that means companies like EOG, EXE, I think is they expand energy. Um, Companies that have a lot of natural gas exposure are starting to rally. If we look at the 10-year and the 30-year, we want these to go lower, and they went lower. And you can see back down below the 50, down about 1.5% on the 10-year, and on the longer term 30-year, kind of looks like another similar pattern with a bit of a breakdown here below the 50 and down 1.17. So weakening interest rates means bonds are getting stronger, dollar is kind of consolidating, and rates are down. Good stuff for the U.S. markets. So if this House can pass the bill and not add so many draconian things that mean the Senate can't sign off on it tomorrow, I think that we have a nice rally setting up. And I think the most likely thing is the bill gets signed. Buckets, neutral. You could see we've got less stocks at the below and above the Bollinger Bands across the board, which means they're getting stuck in the middle. Neutral signal. If we look at ratio charts, well, I'll come back to that in a second. Look at the other market breadth tool. What I thought was different was the divergence between the S&P 500 and 1500 and the rest of the markets. And you could see that 13-week new high, new low, 0.89 on the S&P 500 and 0.80 on the S&P 1500, while it's only 0.65 on the Russell and 0.54 on the NASDAQ. That just tells me you have more stocks at short-term highs. When that number gets above 95, usually the market's going to get troubled. When it's below 0.05 or below 5% or 0.05, that tells me that the market's getting ready to rally. So overall, the broad indexes are kind of neutral, but this is getting to a point where you start to think, does it get close to a reversal? Again, a reversal doesn't have to be a pullback. It could be something as simple as some sideways movement. If we look at the sectors, just as it was last night, the thing that stuck out the most to me is the strength in healthcare. And I did enter a position in LABU, short leash, but from history, biotech has a tendency to run up the end of the year into the JP Morgan meeting. And something to be aware of if you're not, the American Society of Hematology and the San Antonio Breast Conference meet during the first 2 weeks of December. And those are often events where market moving data is released. So you need to know the data that's coming. So technology's still holding up okay, but it continues to ease off recent highs. Energy as well easing off. It looks like materials is making an attempt, as is financials here. But the strength has been and remains in healthcare. Let's go to the top-down aspect of the JES layout. There have been some questions about how your numbers didn't match up with my numbers. Now, I am doing my video, and there's still 3290 stocks again today. There must be a filter in the system that I'm not aware of. I know some other people saw 32.90. I have asked Praveen to check on it. It's hard for me to believe that enough stocks drop below $1 or 100,000 shares traded to take it down. So we will follow up on that. But with that, those stocks, we can look at the top-down picture where they're in sectors and industry groups, rank on percentage change today. The top three were materials, cyclical, and financials. Now, I don't, I notice what's missing there is healthcare. So when I see that, I might actually cheat and rank it by 2-day momentum, cyclical, healthcare, materials. And then over here, let's do the same thing to be consistent and take the top 10. 2, 3, 4, 5, 6, 7, 8, 9, and 10. So those who know me know that I'm kind of a healthcare entrepreneur, and I've brought a number of companies to market and have sold them, which has been a good thing for my family and myself. But I've got to know two of the companies on this list very well. And these are some of the best operating companies that you're ever going to find. I thought they'd be on this list. I guess it's under manufacturer. So just to mention, if this market gets rough, Cencora, which is the old AmerisourceBergen, these are stocks that do well even if the economy is faltering. We haven't known a lot of recessions in healthcare. McKesson, talked about this off and on for months, just off all-time highs. And Cardinal are three companies that will resist some weakness in the economy. And you can see Cardinal, big gap up on earnings, trading pretty much at all-time highs. But we have a bunch of healthcare in here. We got manufacturers, we got healthcare plans, um, and just missed on instruments and devices. So let's just rank these by 2-day momentum. Now I took out stocks below $5 and 500,000 shares. Let's just look at a couple. Lilly, the original GLP-1 manufacturer. Um, is it too late to buy this? I bet someday we'll look back and say no, but it's hard to buy it here. You got a stock that's had a massive run. Now I know several of my friends bought it back when I first talked about it before the GLP-1s were as obvious. It was probably back in this area with this breakout, and they've had a nice run in the stock. Hard to hold because it's had a lot of volatility, but boy, does it look strong right now. Would I enter a new position here? The high jumps at 100%. Probably not. Great shoes, great earnings, I believe, today. Let's see. 217% earnings per share growth, which was a 58% surprise. 34% revenue growth, which was a 38% surprise. I see those numbers. I think this thing is something that could continue. So maybe if I want to add some um, some discretionary to my portfolio, I might take a look at or at least put it on a website. Elevance is a company I know very well. This is one of the managed care plans. They all sold off as United kept imploding with bad news. Their their debacle on from a data perspective, and then the concerns about Medicare Advantage costs. Well, you can see the Elevance, same pattern, but these stocks are moving again. Elevance attempting a comeback. These companies make a lot of money, but if you're into earnings per share growth, it's hard to see a lot of growth here in the very short term. What's the next one on the list? Here's United. Now, United was interesting because this was their big break, and then this here was Warren Buffett taking a position. Expedia, travel stocks have been strong. This one had a big gap on earnings. Is it getting extended? Yeah, I think so. 100% on high jump. I mentioned I opened up a gold position, AU. Now, would I have rather bought it back on this gap? Absolutely. But I think gold is going to go much higher. If we look at AU's fundamentals, you could see major earnings per share growth, and you look at a PE forward of 12.82. Looks to me like it's kind of a bargain, and you're going to get $1.66 in earnings versus 89 cents. It's almost a double. So I like AU here. Again, I would have liked it better a few days back. AbbVie, um, I like this company a lot. They've had some great drugs of late. Um, they've always been concerned about losing exclusivity um, on their Humira, their immune modulator drug, and they've held on to the revenue longer than anybody expected. And a news flash, it's 8:26 p.m. Eastern, and they just said that the House passed it. And as you'd expect, the futures flip from negative to positive. It's where they end, not where they start. So we'll see what happens. Kind of figured you'd see that sort of a relief rally. RGLD, Royal Gold, another gold stock. This one might be a better buy point, taking out the 50. Definitely not extended. So there's a lot of interesting things. AEM, one that has more than gold. It's got nickel and some silver. This one actually looks really well um, as well, and you're coming up off the 50. So as I said, I bought Nugget, which is a leverage ETF on gold today, and I bought some IBB LABU after several days of seeing strength in the biotech. I wanted to add to my position there. So that's top-down analysis at its best. We picked the top sectors, took the top industry groups in those sectors, and looked at the first bunch of stocks. Now, I can't help myself. I always like to find the shiny new objects with bottom-down approach. And to do that, typically I will, well, now I made it easy. Let's go to the A plus scan. What is in the A plus scan? The A plus scan will be stocks. Oh, there's only one thing there? Wow. To be in the A plus scan, you have to have these two blue dots. These are momentum, so I call that double momentum. You have to see your relative strength versus the spider crossing over the moving average, which means you're strengthening versus the market. I want to see your volume crossing over the moving average, and I want to see your weekly bongo, your trending indicator, telling me you're in a longer term uptrend. So AbbVie, which we looked at a few minutes ago, it pays a dividend of 3.51%. Um, it's going to have 337 versus 216. That's 50% growth on an old stodgy company. I think AbbVie looks interesting here. Now, I'm a little concerned why I only have one here, so let me check one thing. Let's go into my weekend review list, and let's just see how many A pluses we have here. This is a curated list of some of the best stocks. Got a couple others popped here. CWAN. I don't like things in downtrends that are well below the 200. You could balance that by saying earnings are out and nice gap up, 2 days trading nicely, double blue dot. The rest of the things are intact. And then PODD, which is Infusiolet. It's one of the diabetes companies. I think of the bunch, I'd probably go back to Impulse. I'd probably stick with AbbVie. Healthcare is strong. PODD is also a healthcare stock. One of the other things I like is the A scan, and this one will give me a few more typically. Now, there's probably something wrong with the data from the data vendor because typically we're seeing more. So let's just go back into the weekend review and look at the ones that came up on the scan here. The scan's different. This scan requires your weekly bongo to be green or blue in this case. You need to be in a squeeze and have a mobile breakout, a momentum or a breakout with relative strength and OBV crossing. So this is Citigroup. Banks are super strong. Earnings are out. This one's probably a laggard, but it looks pretty attractive here. CNTA, Contessa Pharmaceuticals, big pullback to the 50 and must be a data story because I don't think it's about earnings. Let's see what we can see in the news. Oh. When you see a public offering, it tells me they probably had good data and they're taking advantage of it. Yeah, I don't see anything. I don't go back far enough. I do your research. I do love this. Um, the pullback to the 50 and the breakout. It went a little far for my taste, but this one doesn't look too bad. Delta Airlines, the CEO, Ed Bastian, was on CNBC today and basically said they're killing it since the earlier slowdown this year and didn't even seem to be that concerned about the air traffic controllers and how long that would last. I think this is another one That's interesting. If you look at earnings, the earnings are out from October 9th. Um, you look at revenue growth, stubbed its toe back here. Um, Probably worth taking a look. It trades at a super small multiple, pays a dinky little dividend. Nova Lifestyle, don't know anything about this, but it's a pattern that I like. The fact I don't have fundamentals is bothersome. It probably tells me it's a relatively young stock. Any kind of news on it? Tech-driven consumer sectors. So a secondary placement of a lot of stock. Um, it's already in the market. That was back in September. So it's not unusual for when you see something like this happen, for the company to say, let's go sell stock because instead of selling stock here and raising funds at 50 cents a share, I can sell it up in this range for 3.75 a share and be less dilutive. And the market kept on running. Probably worth taking a look at what's making this tick. I like the pattern. Then here's that PODD again. And the only thing I didn't like about PODD is it's kind of choppy here. So for those that own the program, I'm going to reach out to Praveen and let him know of my concerns that we're missing stocks in the impulse list. The data is automatically provided for us. We subscribe to a data service, but it seems like they're dropping some tickers. Hope you guys have a great day tomorrow. Let's see if we can hold the gains. But for those of you who have been sitting at home wondering when you're going to get paid, or for those of you that are TSA pre-check air traffic controllers who've now worked for over a month in jobs that need to be done, you're my heroes. Have a great one.